Investing for the long term doesn't have to be complicated. One of the smartest ways to build wealth steadily is by putting your money into exchange-traded funds, or ETFs. Unlike individual stocks, ETFs give you instant diversification, lower risk, and exposure to entire sectors or markets, all in a single investment. In 2025, some ETFs stand out as especially powerful tools for long-term growth, combining stability with strong potential returns. Whether you're planning for retirement, saving for future goals, or simply looking to grow your wealth, ETFs can make investing simple and effective. In this video, we'll explore the top 5 ETFs that can help you build a strong, future-proof portfolio. Welcome to Finance Edge. Number 5. ARK Innovation ETF. The ARK Innovation ETF, ARKK, managed by ARK Invest and led by Cathie Wood, focuses on companies that are leading the charge in disruptive innovation. This includes industries such as artificial intelligence, robotics, DNA sequencing, fintech, and electric vehicles. ARKK invests in companies with massive growth potential, such as Tesla, Roku, Zoom, and Coinbase, aiming to capture long-term technological breakthroughs. Unlike traditional ETFs that track an index, ARKK is actively managed, meaning the fund managers make decisions about which companies to buy or sell based on innovation trends. This makes ARKK higher risk, but also high reward, depending on the success of these forward-looking industries. Over the years, ARKK has experienced both massive growth periods and sharp declines, reflecting the volatility of disruptive tech stocks. However, for long-term investors who believe in the future of innovation, ARKK can be an exciting, growth-focused addition to a portfolio. It's best used as a satellite holding alongside more stable ETFs like VOO or VTI, providing balance while still allowing exposure to high-potential companies. For investors with a higher risk tolerance, ARKK offers the chance to benefit from transformative technologies that could redefine the global economy in the coming decades. Number 4. iShares MSCI Emerging Markets ETF. The iShares MSCI Emerging Markets ETF, EEM, provides exposure to fast-growing economies outside of the United States, such as China, India, Brazil, and South Korea. Unlike ETFs that focus only on developed markets, EEM allows investors to tap into the rapid growth potential of emerging markets, where rising middle classes and expanding industries drive economic expansion. This ETF includes a wide range of companies across technology, finance, energy, and consumer sectors, giving investors diversification within emerging economies. While emerging markets are generally more volatile and carry higher risk than U.S. investments, they also offer the potential for higher returns over the long run. Countries like India and China are expected to play increasingly important roles in the global economy, making EEM a valuable growth-oriented ETF for patient investors. The fund's diversification across multiple countries helps reduce risk from any single market downturn. For those looking to balance their portfolios with global exposure, EEM is a strong choice. It pairs well with U.S.-focused ETFs like VOO or VTI to create a well-rounded long-term growth strategy. If you want to invest in the future of global growth, EEM is worth considering as part of your portfolio. Number 3. Vanguard Total Stock Market ETF. The Vanguard Total Stock Market ETF, VTI, is an excellent choice for investors who want maximum diversification and exposure to the entire U.S. stock market. Unlike VOO, which only covers the top 500 companies, VTI includes thousands of stocks ranging from large-cap leaders like Apple and Microsoft to mid-cap and small-cap companies with high growth potential. This broad exposure ensures that investors don't miss out on opportunities across different market segments. With such wide coverage, VTI helps balance out the ups and downs of individual sectors, making it a strong long-term investment. The fund also comes with Vanguard's trademark low expense ratio, ensuring investors keep most of their returns. Historically, the U.S. stock market has shown consistent long-term growth, and VTI captures that performance in one convenient package. For retirement accounts or long-term savings, VTI is a solid core holding that requires little active management. It's especially appealing for investors who want to set it and forget it while still enjoying strong growth potential. If you're looking for a single ETF to provide broad U.S. market exposure with low costs and long-term stability, VTI is one of the best options available. Number 2. Invesco QQQ Trust. The Invesco QQQ Trust, QQQ, is another highly popular ETF, especially for investors who believe in the long-term growth of the technology sector. QQQ tracks the NASDAQ 100 index, which includes 100 of the largest non-financial companies listed on the NASDAQ stock exchange. This means heavy exposure to tech giants like Apple, Microsoft, Amazon, Alphabet, Google, Tesla, and Meta. These companies are leaders in innovation, cloud computing, artificial intelligence, e-commerce, and electric vehicles, all industries expected to thrive for decades. While QQQ is more volatile than broader market ETFs like VOO or VTI, its growth potential is enormous. Historically, QQQ has outperformed the S&P 500 over long time frames, delivering impressive returns to patient investors. The fund also gives investors exposure to consumer discretionary and healthcare stocks, adding a bit of balance. Its expense ratio is higher than VOO, but still competitive considering the growth it provides. For long-term investors comfortable with some risk, QQQ offers the chance to benefit from the most innovative and fast-growing companies in the world. If you're looking to add a growth-oriented ETF to your portfolio, QQQ is a great option to consider, especially for younger investors with a longer time horizon. Number 1. Vanguard S&P 500 ETF. The Vanguard S&P 500 ETF, VOO, is one of the most popular and trusted ETFs for long-term growth. It tracks the performance of the S&P 500 index, which represents 500 of the largest publicly traded companies in the U.S. This includes household names like Apple, Microsoft, Amazon, and Johnson & Johnson. By investing in VOO, you're essentially buying a piece of the U.S. economy, which has historically delivered consistent growth over the long run. One of the biggest advantages of VOO is its extremely low expense ratio, meaning you keep more of your returns compared to actively managed funds. It offers broad diversification across sectors like technology, healthcare, finance, and consumer goods, reducing overall risk. For investors with a long-term horizon, VOO is a solid foundation because it combines stability with growth potential. Over decades, the S&P 500 has averaged around 8 to 10% annual returns, making this ETF a great choice for retirement accounts, college savings, or wealth building. If you're looking for a reliable, low-cost way to grow your money steadily, VOO stands as a cornerstone of smart long-term investing. As we've seen, ETFs are more than just investment vehicles. They're pathways to long-term financial growth and security. From broad market options like VOO and VTI to innovative picks like ARKK, each ETF offers unique benefits for investors with different goals and risk tolerances. The key to success is consistency. Invest regularly, stay patient, and let compounding work in your favor. Whether you prefer stability, global diversification, or exposure to disruptive technologies, there's an ETF that fits your strategy. In 2025 and beyond, ETFs remain one of the most reliable ways to grow wealth. So, which of these ETFs would you add to your portfolio? Share your thoughts below, and don't forget to subscribe for more investing insights.